Hi, I'm Gilbert Bong, President, Portfolio Manager, and founding partner of Zelos Investment Council. Thank you for joining us for the April 2026 version of the Zelos Ridgeline. In the month of April, there was strong equity market performance globally. This again was led by large cap technology names. Now, there is no dispute that these are high quality positions, but we are increasingly concerned about the concentration. Based off of the S&P 500, the top 10 constituents now make up over 38% of the index. So it begs the question for an investor, when you're owning the market, what position are you actually exposed to? This presents a different type of risk where investors are increasingly tied to a smaller number of names. Now, in this context, the Zelos model portfolios returned approximately 1.1 to 3.8% in the month of April. Looking at this further, the model portfolios warrant a little bit of context. Equity markets performance was good, but concentrated. Fixed income continued to be a bit of a laggard and subdued, and alternative assets provided a differentiated return stream. Now, as an industry, we have done a little bit of a disservice as it relates to conditioning investors to think about performance relative to a benchmark. Now, what really matters is the confidence that an investor has in terms of meeting their financial goals. This is what large, sophisticated institutional investors do. They only look at benchmarks, but not in the same way as individual portfolios. Benchmarking is extremely useful as it relates to monitoring asset allocation and manager selection, but the real focus should be on obligations and liabilities, risk reduction, and diversification away from traditional public markets. This is the same philosophy that we bring to portfolio construction at Zelos. What you will notice if you look at the historical data is the model portfolios have a much narrower version as it relates to the return, significant risk reduction as a result of diversification, which includes alternative asset classes, including private markets, hedge funds, structured products, real assets, and as a result has provided a very unique positioning in the market. So again, alignment matters. We are not for everyone, but for investors that value a risk-aware perspective, institutional quality, diversification, and from perspective, the alignment tends to be strong in how we allocate capital. Thank you again for tuning in, and appreciate all the time and support as always.